So we left off right here. We just finished our furniture. So now the next thing we got to do is now complete our office equipment, our equipment and vehicles. So again, all of these you're gonna have to insert sections in there, and you're gonna have to recalculate everything. So here I am. I'm gonna start by adding all the necessary lines that I need, and then I'm gonna go back and calculate them.
Yes, I did that on my break. So.
Okay. All right. So, yes, that's okay.
I got back a few minutes early. I did the same thing. So
Perfect. Okay. So here I should have accumulated. When my A finally appears. Okay. So A cum deep for computer. All right. A cum deep for my printer. A cum deep for my register. And then I also have to do a cum for my brewer. All right. And by us doing this, it's going to actually make our financial statements a lot easier to, instead of having all this accounts or clutter or whatnot, you'll see what I mean when we complete our financial statements. It's going to be a lot cleaner. Okay, so brewer, grinder, and I'm also going to show you a technique that you can do for Excel. It does save a lot more time in regards to, you know, doing it, but the only dangers it has is you generally don't want to do it if you're doing it on multiple sheets, and I'll explain what I'm talking about. Okay, so truck. Okay, so let's go back up to the top to my computer. So my accumulated depreciation for my computer again is going to be
6116.
6116. Okay, so again 6116. All right. And then the accumulated depreciation for my printer is going to be
$12.63.
1263. And then lastly, my register is going to be for
$21.65.
2165. 2165. All right, so again, now we got to recalculate our total office equipment amount. So it used to be 2,863. Now it's going to be
$2,767.76.
That's what I got too.
$2,767.76. Yes. Good. All right, now let's go ahead and do the brewers and the grinder. So what is my accumulated depreciation for my coffee brewer?
$96.20.
$96.20. 96.20. And then for my coffee grinder, what's my accumulated there?
6909.
6909. 6909. So again, adjust this amount.
Oh, it said no. All right, equals this minus. All right, I got 84, 85, and 57 cents.
Yes, good. I got the same thing too.
Okay.
All right. And then lastly, your vehicle slash truck. All right. So the ACUM for the vehicle, or the ACUM for the truck is
257.67.
Beautiful.
25767, making my total vehicles to be
$31,951.23.
okay, good. All right. Then we're gonna adjust. Do we have any prepaid amount accounts that changed?
No.
No. What about my deposits?
Nope.
And then Goodwill. Yes, Goodwill has in fact changed.
Right.
So I have to insert a little box down here to reflect my Goodwill. So ACUM ACUM am mort Goodwill for the $11.67. Changing my Goodwill to become
$2,088.33.
good. All right.
Yes.
All right, and then let's see what we have next. Do we have any miscellaneous expense?
Nope.
No, so we are done with our assets. Okay, miscellaneous expense, nothing. Okay, so now let's go ahead and go to our liabilities and what changes have we have here? Did we make any changes to accounts payable?
Oops.
No.
Nope, it's still 3141.74. What about Visa payable?
Oops.
Nope.
Nope, still the same. What about our payroll liabilities? Yes, our payroll liabilities has in fact changed. We have two more things that we have to add in here. So I'm going to insert the two things, right? We had to do salaries and wages payable. And we also had to do commissions payable. All right. And
Sorry, I'm still typing.
no worries. I wasn't done talking, but okay.
Okay.
There you go. Salaries and commissions payable. So yes, we did in fact had to accrue these two little things. So we're gonna have this little formula here will actually change. It's gonna be equal sum. And it's going to consist of this all the way down to workers' compensation. Okay.
And let's go. And
Okay. Are we ready?
No, I'm finishing my formula. Sorry.
Okay. So equal sum. So make sure you calculate you add that extra two little things in there. Okay. So how much was my salaries and wages payable for?
$340.
$340. How much was my commissions payable for?
That is $170.04.
170. Oh, oops. 170.04. Okay.
The total to $689.80.
689.80. Yes, because all of our other liabilities we did not touch it. We didn't make any payments so far. Any utilities payable? No. Any unearned revenue? No. Did we make any changes to our sales tax payable?
No.
No, no changes to sales tax payable. It is still $970. And then lastly, did we make any changes to our loans?
No.
No. So loans is still the 29,000. All right. So again, moving on to equity. Equity is okay. Did we make any changes to owner's equity?
No.
No, not yet. Okay. And then owner's equity is also the same. So those are still going to be there. They're not contra accounts, okay? They're separate accounts, separate main accounts. You'll see when we close our books what happens when we adjust our statement of equity, okay? So revenues, did we make any changes to revenues? I don't believe so, but let's go ahead and double confirm this. Any changes to the sales regular coffee?
No.
No. What about Supreme coffee?
Nope.
No. What about medium regular? I mean, the coffee mugs.
No.
It's still 15.24. What about the medium?
No.
No. And the medium supreme?
No.
No. So my sales are final, right? Nothing else has changed. No sales has changed there. Okay, what about my sales returns and allowances? It's still the same for $19.96. Same thing with my sales discount, has not changed. It's still not 907. And then my delivery is still 210. So none of those have changed. All right, now let's go ahead and dive into cost of goods sold. Yes, we have made lots of changes in cost of goods sold. So let's look at our cost of goods sold account. Okay, so any changes to our regular coffee?
No.
No.
No, it's still $8.39. Any changes to our supreme coffee?
No.
Okay. We also have a new entry here. We have a cost of goods sold for the ceramic coffee mugs. So we have to insert that piece of information in here. Okay. And just a little heads up, I'm also going to insert for my cost of materials because we need to also plug that in there as well for my cost of materials. So one more. Okay. So again, let's go start with our cost of goods sold, ceramic coffee mugs. Or is it just mugs? No, nope. I put in ceramic coffee mugs. How much was my total there?
$9.59.70.
All right, now I gotta adjust my little formula here. So my cost of goods sold is going to be a grand total of
$2,678.51.
good. Right. So then now we are now introducing to a new little form or a little main account here called cost of material. So cost of material is a main account that we need to solve for. Okay. So what is under cost of material?
We have medium coffee cups.
Yes, we do. So we're gonna have to write COM, medium coffee cup. So COM, medium coffee cups for what amount? Oh, coffee cups, not mugs.
$2.86.70.
All right. 2.86 and 70 cents. Okay. What about my sugar?
Sugar is $21.60.
Sugar, so cost of material sugar. C-O-M, sugar, for $21.60. And then lastly, what about my cost of materials for the creamer?
Creamers, $195.96.
$195.96. And we're going to, in your cost of materials, we are going to add all of these together.
Total
Okay.
of $504.26.
So we just used up $504.96, or 26 cents, yeah. Okay. So there's all of our cost of materials. Last but not least, now we have to go ahead and complete the rest of our expenses. So, yes, we've had a lot of news and a lot of old. So let's start off with the old first, or let's start off with the list. So first off is advertising expense. Did that make any changes?
No.
No. What about bank fees? Yes, we have to add that in there. Okay, how much was my bank fees for?
$291.23.
$291.23. And of course, copy that right over. Okay. What about my business expenses? Did that change?
Yes.
Yes, it did. It jumped up from 1,000 to how much? 128278. There you go. Okay. Freight expense.
Same.
Did it really? Let's look at it, the freight
Oh,
expense
no,
again.
sorry, 0.
It's been zeroed out because of our conversion entry. So therefore, it is now nada. Nothing there. Okay. What about insurance expense? Yeah, that has stayed the same.
That's this.
Same thing with labor. We haven't changed anything here. Still 1980 plus the 252, which gives us grand total of 2142. Okay, so that's the same. Here you go. What about license and business? It's still 375. Loss on assets still 2,000. Here you go. We added an office supplies expense.
Yeah.
So where are we? Here you go. I gotta move payroll down to insert office supplies expense. Right? And how much was my office supplies expense for?
Oh, $70.
$70. Okay. Whoa, okay. Is everyone here?
Yep.
Okay. Next is going to be our payroll expenses. Yes, because we had to incur or accrue our Irene and Albert's commission. So Irene, so how much is my salaries and wages expense?
Let's see, 884.
884. Okay. And then how much was my was Albert's commissions?
310.22.
310.22. All right. And then, of course, my payroll tax expense has not changed because we didn't calculate any payroll taxes. So my total amount in my payroll expenses is going to be
$1,292.20.
good. Okay. All right. Let's wrap up going down. After that, we have purchase expense. Is there anything in purchase expense?
No, it's gone.
No, we cleared it out. So purchase expense is 0, returns and allowances 0. Yes. My discount is also 0. So here I'm going to go ahead and place that in there. Purchase expense is now 0. My returns is 0. And my discounts is 0. All right. Then I have my rent expense is still $1,500. We're not done there because we've also added, let me see, we don't have travel expenses. We don't have utility expenses, but we do have a bad debt expense, a depreciation expense, and an amortization expense. Amortization.
Right.
All right, so let's go ahead and add those last 3 in there. So right under my rent expense, I'm just going to add a few so I don't hit the super bottom of this. Okay, so I have my bad debt expense. For $217.11. Okay. I also have my depreciation expense. Okay, for $586.93, which reflects on this side as well. And then lastly, I have my amortization expense. For $11.67. Okay. And I'm going to change this to blue. And do we match? Oh, I hope we match.
Well, your 2 columns match and 2 columns match.
Okay, so let me see.
You
Does
have 2 that are the same and 2 that are different, but they're the same.
hold on. Oops. Oops. Oh man, I went into the wrong column. Okay, let me go edit, undo.
Oh, that's,
Okay, let's see how much this discrepancy is for.
I think my stuff got messed up when I moved it over. I don't know.
Oh no. I matched.
$621.
For some reason, I match.
What?
Oh, okay. So one column is your debits and one column is your so
My
yeah.
2 debits match and my 2 credit columns match, but I'm off by $621.61.
Mine match. My debits column matches my credit column and my blue debits match my blue credits.
Right, that's what I said. I have the 2 that match and 2 that match. They don't all 4 match.
Oh yeah, of course, because again,
Yeah.
when we calculate our debits and credits, right? Because we're summing up the main accounts, the your debits and credits are not going to match there.
Oh, okay.
Yeah.
All
So
right. No, I was say because they all were the same the other day. So
yeah.
they had to be today too. Okay.
Yes, because we did a lot of subtracting in this one. Okay, so yay, I match my debits, match my credits. So I can say this is a success. Now, Michelle, you said you don't match?
No, none of my columns match, but I think formulas and stuff got messed up. I'm gonna go back and watch the video,
Okay.
and I'm gonna do it. I'm gonna do it again. I'm gonna do it on my own and
Okay.
see if I can get it to balance, because it's like every single column is different.
Oh, I see.
So
All right.
sit here and try, and I only have one column that matches yours, and it's my very, very far column for the $80,892.64.
That's exactly the number, yes.
Yep, and then I have this column that matches too, but my other two columns don't match.
Okay.
That's completely fine. As long as your blue ones or the main account ones, that's what we're looking for. That's what we're testing for, is primarily to focus if the blue ones match. Because the blue one
Okay.
is a tally of all of our main accounts, which is exactly what we're looking for. So
Okay.
so if your just your all your accounts in general, those should match as well to make sure that you did your accounting correctly. But again,
Okay.
the main goal is to make sure that your main accounts are there, which is really weird because you were answering all the questions correctly. So
Yeah,
as
I
long
don't
as
know. That's why I
as
think it's a formula.
mhm,
So I'm gonna go back and I'm gonna look at everything,
mhm.
all the numbers, and just make sure.
So as long as you said you match my $80,892.64, you
Yeah.
are good.
Okay.
All right. So now we finally have accomplished step number 7, which is to complete the adjusted trial balance. So next is to complete step number 8, which is to complete the financial statements. So with that being said, we can put our ledger down for now, and we're going to look at our financial statements. So what the financial statements is going to be entailing is we're going to be piecing together from our trial balance, okay, from our adjusted trial balance, okay, because here we took a summary of all of the accounts, right? And we also took a summary of, and it's exactly what I'm going to show you. So the first thing first is, so I'm blowing up this so I can see a little better what my accounts are going to be utilizing for each statement. So the first one is going to be your statement, your income statement, also known as your profit and loss. Okay, as you can see, you need your total sales and anything that goes against sales. So you got your sales returns and allowances and your sales discount. So because we did the greatest thing by summing up our information, so how am I going to utilize this table? You're not going to treat it like it's debits and credits. How you're going to treat it is how the columns are going to appear. So for example, my sales, I'm going to tally up my total sales right here, which we've already calculated it. We've calculated it here in the adjusted trial balance. We're going to go locate our sales. So let me find my sales. All right, sales. My total sales is going to be this blue number here for the 15,445 and 39 cents. So what I just did was I cell reference using a couple seconds, using 2 different pages. Okay, so what
Okay.
I
How did you
did,
do this? Mine didn't work.
okay, so how I did it was
Okay.
in this column, right? So it's blank right now, right? I just press equal to activate my cell reference. I click my adjusted trial balance and I find that number, so my sales here, and I'm gonna click on it till you see the running ants, press
Right.
enter, and it should copy it right in there.
Oh, okay.
Okay,
Like
so for
press enter. I
Michelle,
went back to the sheet. Press enter. Okay,
yeah,
gotcha.
Yeah, I just typed it in.
yeah, for you, I don't know how to do it on Google. So you're gonna have to just type in 15,545
Yeah,
39.
that's what I did.
Okay. So then what we're going to do here is what is our total sales returns and allowances? So I put just returns. So I'm going to do again, cell reference. I'm going to locate my returns and allowances for $19.96. There it is. And then my sales discount, same thing. I'm going to locate it. Sales discounts was for sales discount. Yeah, sales discount was for $907.87. So boom, I copied those down here. So that means in my right side of the column, I'm actually going to tally up these totals. So here, my total sales is my 15,000. Obviously, my returns is going to lower my sales. And of course, my discounts is also going to decrease my sales. So I should have a total of 14,617 and 56 cents worth of actual sales I've actually that went through.
Why do I have a different number?
Okay. Did you equal sum all of it?
Okay, there we go.
Hold on a second. Let me save and try that again. Okay.
Not plus, not plus.
Oh, what?
Remember, returns and allowances and discounts decrease your sales.
Oh, that's why. Okay.
Yeah. So one way you can do it, again, if you're more of a fan of summing up your columns, you may want to put a negative number in between here. So to reflect that this is a negative 1996 and this is a negative 907. So instead of having to, you could just sum up your columns. So here I should have 14,617 and 59 cents. Did you get that?
Yep.
I did.
Perfect. Okay. So the next column is to go ahead and calculate your total cost of goods sold, which in fact we've actually done. So back to my adjustment trial balance, I'm going to locate my cost of goods sold for a total of 2,678.51. Okay. Next one is I also have to calculate my total cost of materials. So I'm going to locate that. My total cost of materials was for the 504.26. Okay. And so what your gross profit is going to be is it's going to be your total sales minus your cost of goods sold minus your cost of material. Okay? And that should leave me a gross profit of 11,434.79.
Yay.
Yeah.
Yes. Okay. So that may be your gross profit, but at the end of the day, we need to now see if that actually covers all of our costs that we've incurred to operate the business. So this is where all of your operating expenses are gonna go. All in here. Okay, so we're going to tally up every single one. So you may need to insert a few extra lines just in case there isn't enough of everything. So let's go ahead and insert our first one, which is going to be our, so this whole column right here. So we're going to do advertising expense, bank fees, all of these expenses that are here, except for your purchase discount, purchase expense. Okay, that's already out. So here we have advertising, we have bank and business. We don't have freight anymore, so we can get rid of that. So what I'm gonna do is I'm gonna copy all the titles over, and then yeah, and then paste in all of their numbers. So here's all this. And then again, you're going to use the left side for all the numbers. Your right side's your actual calculation. So here, I'm going to copy the information here. So advertising. So advertising is going to be the 150. Bank feeds are going to be the 2 this. Business expense is going to be the 1282. All right, we don't have any freight expense. Okay, so what's the one next after that? We have insurance and labor expense. All right, insurance expense was for $195. Labor expense was for $21.42. Okay. Let's see, what else do we have? We have license and permit expense. We have, okay, so we have all four of these. We have our loss on sale of asset, office supplies expense, and payroll expense. Okay, and I'm gonna go ahead and tally all of those. So my business and license is this. My loss is 2,000. My office supplies expense was for 70. And lastly, my payroll expense was for the 1292. Okay. Other expenses that I've incurred, of course, for my purchase expense, it's completely zeroed out. So all I have left is going to be my rent, my bad debt, and my amortization. Okay. So for my rent expense is my 1,500. Depreciation was for the 217. Oh, sorry. My bad debt. Hold on. My rent was for 15. My bad debt was for 217. My depreciation's for 586. And lastly, my amortization is for the 1167. Okay. Okay. And then I'm going to enter in another one right here that says total operating expense. Okay. And I'm going to sum it here.
Oh no, that can't be right.
Oh my God, we barely made a profit. All right, let's see. Okay.
I don't know what it's doing. It's taking the whole column.
Oh.
Some. Why? Why are you doing this to me?
Why?
Right?
Stop it!
What column are you?
Oh, I was trying to do the equal sum for everything that we just put in, but it's taking the whole entire column every time I do the equal sum where we put in the total operating expense at the bottom to tally it.
Uh-huh.
It's taking the whole thing all the way up to the sales and
Okay.
adding it together.
Okay.
So I'll get my calculator out.
Okay. I was gonna say you just have to modify the formula. But I mean, if you want to do it that way,
I got it. I'm going to do it in the other column. I saw you had it on the other side.
okay.
There we go. I got it.
So you got the 10,100 49.
$49.75.
So that's your total operating expenses.
Right.
Okay. Other things that you have to also place in here as well is any other income, and we have only one other income.
One other. Is that our delivery stuff?
That is our delivery income, yes. So make sure that you place it in here. Delivery income. Okay. And that delivery income again was for the total of,
Is it $210?
I believe so. So equal delivery income, which belongs up here in income, not under expenses. The cost of material, delivery
Right there.
income for 210. Yes. All right. Other factors too is going to be any non-operating expenses, which in this case I don't teach, just because we're too small of a company to have a non-operating income. Second, as well, or a non-operating expense. I'm sorry. Other things too is going to be income tax. We're not a corporation. We are a small private company, so we do not have to incur income tax based on our sales. Okay? So that's what we get to. We get to be tax exempt because we are a sole proprietor. If you become a corporation, you have to be taxed for the income that you made. So this formula here to determine your total net profit or loss is going to be your gross profit, okay, minus your total expenses, and you're going to add your other income to bring you out.
Sorry.
I'm sorry, you went gross profit minus your
Total
expenses.
expenses, plus your other income.
Oh, man, what are you doing to me here?
Okay. So I need help.
Okay, let me try this one more
Where
time.
are you at? Are you at the very bottom?
On that very bottom, yes.
Okay. Well, I'm sorry.
Equal. And you can type this in if you'd like. Your gross profit minus your total expenses plus your other income.
Plus the other income.
Yes. Plus this.
504. Okay.
Man. $1,495.04.
Yes, so we actually made a profit. Oh my gosh. All right, go ahead and save this form. All right, so the next form is going to be connected, is going to be your equity. Okay, so let's look. Now, general rule of thumb is when you start your company and you're a small company, as you can see, in our income statement, we recognize that we actually gained $1,000 of profit. But the rule is, well, because you're a sole proprietor, you can either pocket this $1,000 or you can reinvest into your company. Your best option here is to reinvest into your company, especially if you're starting off, because you never know. Next month, you might incur a loss, and then you're going to have to take it away from your equity. So here we're going to answer a few basic questions. Okay, on the right side, what was your equity in the very beginning of the month?
30,000.
That's correct, 30,000. You can either type 30,000 or you can self-reference it from your adjusted trial balance. In this case, I actually know it, but I already had my equal already ready, so 30,000. Okay. Now I'm gonna choose to reinvest into my company. So on the left side, I need to do some calculations on the left side. So for this one, my net income, which we can reference from our income statement, which was the 1495.04. Okay. Another one is other things that affect equity, right? Is capital contributions. If we invested our own money in there, it would increase equity. Since we've had a withdrawal from the company, we took money away from the company, so therefore we need to recognize a negative $3,000 because that's how much we took out of the company was a negative three. We withdraw from the company the $3,000. Okay. So then your total ending balance in your equity account is going to reflect the 30,000. Okay. You're going to add your 1495, or actually, you know what you can do? Let's do this again. So in your right side column, you're going to go ahead and do a sum of this. So you're going to take your profit plus your negative $3,000. So here you're actually going to decrease your account by 1504.96. So therefore um, your new equity is going to reflect $28,495.04.
Okay, wait a minute. I messed this up.
Yeah, sorry. I figured this would be easier to see.
Okay, so equal, so the 1495 plus or minus the negative? No, plus the negative
Yeah, plus a
3,000.
negative, good.
The 3,000, okay, is the 15, okay.
What is
All right.
going on here?
Then you're
And
going
then
to add this
that
column
is
up.
equal the 30,000 minus the,
Okay, got it.
You're going to add it because it's a negative number.
I don't know what.
oh, I got you, all right.
So here we actually decreased our equity by $15,004.96. Why? Because our profit was only about $1,500, but we took out $3,000. So we kind of hurt ourselves here in the value of our company. It lost a little value because we took too much out of the company. Okay? So there you go. So keep this number. This number is going to be used in the next financial statement, which is to calculate your balance sheet. Okay, so here's your balance sheet. Again, we are going to be using main accounts. So this is going to be primarily going to be copy and paste again. And we're going to copy and paste all of our main accounts. So the first one, again, we're going to be looking at our assets. Which ones are going to be our assets? Okay, so again, if we look at our adjusted trial balance, your assets going to be obviously your bank, your accounts receivable, your business supplies, your office supplies, and etc., etc. So you're going to be copying all this information, and we're going to be using the main account numbers here. Okay, so the bank. So in your balance sheet, we're recognizing only assets first. So the first one I recognize is going to be my bank account. I'm gonna, I guess I'm gonna cell reference these. So bank, all right, is for a total of the 2,858.59.30. Okay. Next is your accounts receivable. My accounts receivable is going to be for the amount of the $437.16.
I'm not moving as fast as you. I'm copying, pasting, and moving back and forth. So
Me
hang on a
too.
second.
Me
Sorry.
too. It's just because I can't just highlight a row because I
Right.
have all of my, little small accounts underneath it. So I have to do one at a time.
I gotcha. Okay.
So, oh shoot. What did I do? Okay, so let me see what my next account is going to be. is my business supply. So what I'm gonna do is I'm just gonna do all the accounts first and then copy the numbers after. So office supplies, inventory, furniture, office equipment. Then I have equipment. Then I have vehicles, prepaid accounts, and then I also have my deposits.
Oh, it's keeping up.
And lastly, I should have just my goodwill. All right, I don't have miscellaneous suspense because that account is 0, so I don't need to add it into my accounts here. Okay.
I'm still transferring, so sorry.
No worries. Take your time. Okay. See? And you see how every income statement and everything, because we use main accounts, they don't look so cluttered. They're short, sweet, and simple. Okay? All right. So I'm going to go ahead and start copying over my amounts here. So,
Yeah, but now I can, at least now they're grouped, I can do them in threes.
okay. Business. Okay, so I'm going to do business supplies first.
Running out of room.
You may have to add a couple lines in there.
Sorry, that's taking me longer now, so. All right, sorry, this is really taking me a long time. If I would have known, I would have done this ahead of time.
We do it together. There's no ahead of
I
time in
know,
this one.
I'm still typing too. So
No, you
yeah,
guys.
no.
Everybody up.
No. We have the next 45 minutes to complete this, so you're fine. We're doing this together. As you can see, it's taking me a while too, so we're all in the same boat. Okay, so I think that's that.
Uh-oh.
Right, what happened?
I must have fat fingered something, so I got to go back and look at these numbers.
Okay, which ones do you need so I have it here?
Let me see. I'm gonna match them up.
Oh, okay, yeah, sorry. I forgot you're using one screen. Tell me which numbers you need to match up.
I'm just going. I'm at the top. So, right here. What is this? What did I do there? Okay. I found it. It's right here.
Okay.
I don't know why I have office supplies listed as $80. Oh,
No.
new office supplies as the 211.76 twice, and I think it's supposed to be $80 for the office supplies.
You are correct. Thank you. $80. Office supplies. So I fat fingered something instead. So office supplies is indeed this.
Now let's see if we match.
Okay, 709 for inventory. Okay, let me see. Did we get 6,363?
Yep, that's what I have. Okay. I was like,
Yeah,
oh
and
no,
I
I
don't
can't
have the
see
amounts yet. I'm still copying, pasting the
That's fine.
account.
Take your time.
Oh my goodness. All right, where did I leave off? Finally finished that. Where am I?
Okay, we're only doing assets only.
Okay. So let me.
Okay. Ooh, I misspelled. I put total liabilities and quitty. There you go, equity. Oh, I didn't even put total equity. What is wrong with me? Total equity. It's definitely going to be one of those. Okay. Okay. So, Robin, where are you right now?
Sales returns and allowances.
Why are you doing sales returns and allowances?
Oh, maybe I'm not. That's where I'm at. So let me go back there before I do it. All right. So, okay, I got all the way to Goodwill.
Goodwill.
Where you are? Yeah.
Yes, we're done with that's it. Goodwill is the last of our assets.
Okay.
Okay. So there you are. 63, 63, 2, 29. Okay. So did we get that? Did you get that, Robin?
I'm summon. Hold on one second. And 6363229. Yes.
Yes. Good.
All right.
All right. So next thing we're going to be listing out is going to be our liabilities. So let's go ahead. I'm going to add one more line just in case I don't have enough. So what's the first liability that we recognize in our books?
Accounts payable.
Accounts payable, yes. So again, I'm going to go ahead and list out all my accounts first. So liabilities come first. When I find my accounts payable, where is my accounts payable? So here's accounts payable. Okay. I also have Visa payable. Oh, Visa payable. Okay. I also have payroll liabilities. And I also have sales tax payable. And then lastly, I have my loans. Okay, so I'm going to total up all of those on the right side column.
Stop.
Okay, so Visa payable is going to be this number. Payroll tax liabilities is going to be this number. Next is my sales tax payable. Oh, forgot to do my equal. Equal. And then my loans is 29,000.
Where the heck is my sales tax?
Okay.
Oh,
Okay.
Sorry, hold it.
No worries.
1, 2, 3. Stop it, Ben. Okay.
5, 27, 25. Oh,
Okay. So what was my total liabilities?
Oh, what is this?
that's $35,137.25.
Did you get that too, Michelle?
Yes, yes, ma'am. Sorry.
Okay. And then lastly, okay, so it says here total equity. You're going to actually copy that from your statement of equity, right? So again, every single worksheet that we complete or financial statement we complete, they link each other. So here you go. I'm going to copy this 28,495.04, and then I add up the total liabilities with the total equity to get me to balance my total assets. So that means I did my accounting correctly. I got my income statement, my
Yes.
statement of equity, and finally my statement, my balance sheet balances. My total assets match my total liabilities plus my equity.
Yes. 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 Yep. I balanced too.
Okay. Good. That means we've been doing really good through this whole entire thing. So file, save. Now, next part is going to be one of the most difficult things that I've ever done. It's going to be the statement of cash flows. Okay? Out of the last 3 years, well, actually, it's coming up too. Me and Mr. Sanchez been working at this for quite some time, and I've come to a conclusion that I can never balance my statement of cash flows. No matter what it is, we're always off by like $20. In other cases, we're off by $5 even, and it's irritating. So I don't know what it is, and I try to do this in QuickBooks to try to solve and figure out what the statement of cash flows is. It still doesn't match what I'm trying to get. I don't know what it is, but I'm going to tell you how to formulate it, and if you do it for the future, when you work for another company and do it and actually manually do this, and you are successful and able to get that hurrah or that hooray that you guys balance, good for you guys. But for this class, if we don't balance, let it be. But I'm going to show you how to complete it, okay? So for this class, okay, so so again, the statement of cash flows, okay? So here it is. It's separated into 3 columns, okay? We have our operating activities, we have our financing activities, and lastly, we have our, investing activities, and then lastly is our financing activities. So here, and then at the end is going to be obviously what your amount is going to be, and then you're going to have your balances in your cash statements or cash, whatever you want to call them, cash amount. So first, let's go ahead and start at the very top. The very top is going to be entering in whether you made a net profit or a net loss. So what the statement of cash flows does is essentially it's asking you the question, how much cash is flowing into your company and how much actual cash is flowing out of your company. So this is where we're going to convert our accrual-based accounts and flip them and place them back into our cash basis. Okay, so the first one is recognizing our net income. Now, our assumption is that net income is cash sales, right? But we also have to include for our non-cash sales, so our accounts receivable accounts, we have to also include that they do exist as well. So this amount here in our net income is not purely cash. So what we're going to do is we're going to come over here. We're going to record what we solved for in our income statement, which was our net income. So here we've solved that our net income was indeed $14.9504, and I put that on the left side. So again, my right side is going to be my calculations. My left side is going to be, the place I add up all my stuff. Okay, so here my net income I know for sure is $14.9504. So usually, ideally, the first thing that you want to recognize before going into your actual operating activities is you're going to actually have to flip and reverse all of your non-cash transactions. So what the heck does that even mean? So depreciation, we talked about it. Depreciation is considered a non-cash value or a non-cash transaction. Why? Are we actually spending money to depreciate our accounts? Are we actually physically counting this much money and placing it into that account? No, we're just placing it in a temporary account holder. So then when we do our adjustments, we're reflecting the current value of our asset. So in this case, we're going to have to reverse all of those, and we're going to actually have to add them back in. So the first one that we did is going to be the first expense, which is going to be loss on sale of asset. Okay, so if you guys remember, that was way back in the very beginning, right? we bought furniture and then we recognize a non-cash transaction because we recognize that we lost money. But did we really lose money?
No.
No, not in a physical way. Okay, it just we had to, or in this case, did we actually lose the money? You know, okay, so we're gonna have to add
There was
that.
no exchange of money on the loss.
Exactly. So in this case, this is going to be added back into your company. Okay. Other things are going to be obviously depreciation expense. Okay, as well as your amortization. Okay, you're gonna have to add those values back in because again, you can't. We physically didn't remove cash from our account. So in this case, we're gonna add it back to our pot of money. So from what I remember, I'm going to my adjustment trial balance to find out how much my depreciation expense was for. Okay, and then of course my here. Another thing too is bad debt expense. We never collected the money in the first place. So therefore, we're taking it out of our company for what reason? So that's going to be something that we have to add back to our company as well. Is because you're writing off money that you didn't have in the first place. So we need to add that transaction back in there. Okay? So we need to add the money back. So in this case, my depreciation expense was for the $217. Okay, what just happened? Okay, equals taking that bad debt expense because again, that was also a non-cash transaction because you physically wrote off money that you never even received in the first place. Okay. So those are usually the first things you're gonna recognize is anything that is a non-cash transaction. Okay. Now the next thing you're gonna do is going to be looking at all of your current assets that are going to be as a placeholder for your money that you supposedly are supposed to have. So again, we're gonna look at it. We're gonna transfer our accrual basis, and what we do is we're gonna cash them out. Now, in this case, we have to understand it like this. So the first current asset that we have on here, besides our bank account, because that's obviously going to be at the very end, is going to be our accounts receivable. Okay. Now we have to understand it this way. Did we receive any money from accounts receivable? Did we actually get any physical cash from accounts receivable?
No.
No. So therefore, because I never received it in the first place, I have to subtract it out of my cash that I'm supposedly be claiming. Because I said that I have this cash, but I really don't. So I have to actually subtract this amount from my actual cash flows. Okay, so I'm going to go here. So my total accounts receivable is now for $437.16. Okay. All right. Other things that we have as well is our business supplies. Do we actually physically have the business supplies of $92.18? In this case, no, we've already spent it. So here, we're going to recognize that this business expense, business supplies, is something I paid already. So I no longer have the cash. Oh, wait, hold on. I was supposed to make this negative. Sorry. negative 400.
437.16.
Yes, negative. All right, and then of course, because I've already incurred my business was I've already paid for them. I don't have the money for it anymore. It's not cash I have. So in this case, I have to subtract it out because I've already spent it. I don't have it. So this is going to be converted into cash by subtracting it out. So my business supplies are going to be subtracted out. Oh, I'm sorry, business supplies. Okay, so in other ways to kind of understand this, your current assets and your other assets, because they're money that you don't actually physically have anymore, what's going to happen is you're going to actually subtract all of those amounts. Okay, and when we move on to understanding current liabilities, you're going to understand that that's money that you didn't spend yet. So you need to add that back into your account. So in this case, all your current assets are going to be subtracted. All your current liabilities are going to be added. All your other assets are going to be subtracted. So in this case, so the next one is business, is going to be my inventory. Or actually, let me see. It goes office supplies. No, wait. So business supplies. After that's office supplies. Okay. My inventory is money I don't have. I'm supposed to cash it out, but I don't have it. So that's going to be something I'm going to, okay. All right. Make sure they're current assets or other assets. So make sure if you touch your furniture, that's not in this section. It's going to be the next section. So prepaid accounts is an other asset. My deposits is an other asset. And lastly, my goodwill. Okay. So again, my office supplies is going to be what I have currently, which is the $70. Or sorry, the $80. The inventory is going to be for the $709. The prepaid accounts is going to be for my $6,654. My deposit's going to be for the 17. Okay. And then lastly, this is the most important thing that you need to know. Because goodwill is linked to an amortization, you're going to list it at the value that you paid for it. So in this case, it's going to be negative. It's going to be a negative 2,100. It's going to be the original price that you have it for. So make sure you go to your adjustments, and you're going to recognize the actual amount that you've collected it for. So again, all of these, I forgot to add negatives to them, so I have to fix them. So this is negative. Oops, negative. This is negative. This is also, both of these are also negative. Okay. So here are all my current assets and my other assets, right? Because it's money that I don't have. I need to subtract it because, again, they're placeholders for how much cash I actually do have. Okay. Now, once I've done that, I have to insert all of my current liabilities in here. So I'm going to add a couple lines in here so I have enough extra space. So again, my first liability I recognize is going to be my accounts payable. Okay? So think of it this way. For your accounts payable, is this money you actually have or this is money that you owe? Like, do you still currently owe this amount?
Yes.
So did you actually spend cash?
No.
No. So you're going to actually have to add that money back in because it's money that you actually still have. You didn't pay your bills off yet. So it's money that you
Yep.
still have. So therefore, you're going to recognize that you have to add it back to your cash flows because it's something that you still have. Other accounts that are going to be here is obviously going to be your accounts, your Visa payable, as well as your payroll liabilities, as well as your sales tax. Okay? Because those are all going to be current liabilities. And all of those amounts are going to be added back in because for your Visa payable, did you make a payment to your credit card yet?
No, and even if we did, it wouldn't be for the full amount.
Exactly. Exactly.
Unless
So
we're rich, yeah.
yes. In this case we're not. We've been down that hole for quite some time. So here we have an overstatement for $1,000, which is money that we haven't spent yet or paid off yet. So we still have that money. So we got to add it back in there. All right. Same thing with your payroll tax liabilities. We still owe them. We haven't paid the government this money yet. So therefore, that is money that is still going to be in my pocket. All right. Same thing with sales tax. We haven't paid the local government our money that we collected. So that's money that we still have. Okay. So now that I've finished my current assets, my other assets, my current liabilities, and my non-cash transactions, what I'm going to do is I'm going to tally and total up this whole entire column. Okay? If you use the positive and negative with me, like negative numbers for your assets, then you could equal sum this.
Okay.
Okay? So on your line where it says net operating activities, I want you to actually go the line above it, or actually on the right side. You're going to total up your total operating activities, or actually you could do it on the left side. You get total up your total operating activities, and then you're going in the right side. You're actually going to do the calculation to find the difference between your operating and your net income. So again, let's go ahead and do equal sum first. Okay, I think I wiped this out. Okay, so equal sum.
It's showing up in my.
It's blacked out, or it's whited out.
There you go. I see it now. I know it's working because I did the whole. All right.
Okay.
That's what I got too.
Okay, so then you're going to take your net operating, right? And you're going to add that negative 61 dollars, right? So now you have a negative 1,666.32. Oh my God, this is a bad luck company. Okay, so that is that right there. Okay, so that's your total net operating activity. So again, this is the reason is because again, we have a lot of people that owe us money. We owe a lot of other people money. So this is exactly why my operating is telling me that I should actually have a negative number. Okay, so
I'm sorry. What did you do with that formula there on the side? The negative 1666.
this is going to be calculating the difference between, or so you're going to take your net income and you're going to add the operating activities to get you your net operating activities.
Okay.
So this is your total operating. This is your net.
Gotcha.
Okay. All right. Once we've done that, now next is your investing activities. So your investing activities is going to reflect any purchases that you've made in regards to fixed assets. Okay? So one thing that we got to recognize is, remember from the very beginning, we purchased and sold furniture for $2,000. So we recognize that we have something invested into the company, right? So we gotta recognize that first, is that we actually had a sale on assets. So in this case, this is sale on furniture. All right. Even though we originally purchased it for $4,000 and we actually sold it, we actually gained that $2,000 in cash. So that is something that we need to place as, yes, we received cash. So therefore, it's going to add back to my amount. All right. Other things that you're going to do is you're going to be recognizing your purchases of furniture. So, purchase of furniture, as well as we also bought purchase of what else did we buy? We bought office equipment. We also purchased purchase of regular equipment, and we also bought a car. Okay? Because we purchased these items, what's going to happen is that is also money you don't have. So therefore, we're going to actually subtract out our fixed assets. Now, here's the rule of historical cost. What is the purchase price that you actually purchased the asset for? And that's where you're going to not use the book value. You're going to use the historical cost that you actually paid for. So in this case, you may have to calculate or recalculate certain sums. So in this case, what I'm going to do is, for my furniture, I remember I actually have this information. It's going to be in my unadjusted trial balance. So here, this is before I did my depreciation expense. So if I go to my furniture, right, this is what I totally made a purchase for in total without my without having the depreciation expense adjusted for. So for my purchases of furniture, I have a total of $5,756. Okay, but again, you don't have that money anymore, so you have to make sure that it is negative. Same thing with your total purchases of office equipment. I'm going to go to my unadjusted trial balance because here I've already had the sum of my total office equipment, right? Before I made the adjustment. All right, same thing's going to apply for your purchases of equipment, right? This was calculated after the discount and before the adjustment. So before making having adjusting for the actual depreciation expense. And then same thing with your vehicle. This one should be the $32,209 or $208.90. All right. And then in the next column here, it is going to be, again, the equal sum. Okay, so I got another negative for $47,479. Okay. And then I'm going to add these two numbers together. So this plus this is going to tell me that I should have a negative $49,145. That, my friend, does not look good. But that's okay. That's because we didn't even make a huge profit.
Sorry, can you do that one again with me? I doing the other column still, so I missed it. So how did you get the negative 49 one?
I just took the net operating and add it to the total.
Total of the 47.
Total of the investing. Yes.
Sorry.
Okay. Last but not least is going to be financing activities. So this is where your equity and your long-term liabilities are going to be. So obviously, the first long-term liability you have here is your loans. Loans means you got money. Am I right? Yes, you got money. How much money did you get? So I'm going to go find my loans here. Where are you? Loans, vehicles. Here you go. Loans. My loan was for $29,221.90. Okay? That is money we actually got. And what we did with this money, we bought a car with it. Okay? So think of it that way. We actually got a loan, meaning we actually got a lump sum of $29,000, but we actually put it towards the car. Okay? So again, that's money we actually received. Other things that affect this as well is going to be your owner's withdrawal. Your owner's withdrawal takes away from your financing of the company. Okay? That's meaning you're taking money away, so you're decreasing the amount of money that you should have. Okay, because your original investment was $30,000 and you decided to take away $3,000. So therefore, that's $3,000 that you don't have. For that negative $3,000. Okay, so go ahead and sum these up. So here I have a positive 2621.90, and now I'm going to go use that against the net investing. So I'm going to take this and I'm going to add my net my total financing to bring me down to now negative 22,000. Okay. So what actually is supposed to happen is, what is the total amount that you started with your company as far as June 1st?
30,000.
No. Remember, we did not start with 30,000. We actually started with 21 was it 21,625? I think so.
Go back to our checking and look what it started with.
Yes, you could go back to your checking, or you could go back to your journal. It's going to be at the very top of your journal. What did you actually start your actual company with? Okay, as of June 31st. June 1st.
Scrolling.
1,625.
Yes. I want you to use that number because truly we didn't actually start the company off with $30,000. Okay? Because again, if we did, then all those expenses would occur afterwards, right? So in this case, we actually started with 21,625. All right? And what's supposed to happen is that you are supposed to add these two numbers together, and that's supposed to be how much money you currently have in the bank right now. Unfortunately, we don't have negative 1,000 in our bank. We currently have how much? what is our current balance in my bank account right now? In my checking account?
Let's see. $2,049.30.
So that is what we're supposed to have. So my discrepancy here was actually a lot more than what I'm supposed to have. So, okay. So how we find this discrepancy is this is what we started with. This is where we're at now versus the difference, which is 22,000 right here, right? So my difference that I have is going to be a difference of $3,347. So this one is because I actually made a lot of adjustments to this particular coffee cafe. So yes, and I've spent way too many years trying to figure this problem out, and I just can't do it. So
What did you originally get? I'm sorry. You took the
Yeah.
22,932.59, the negative, and added the 21,625, which gave you a negative 12 something, right?
that's what is supposed to be in your bank right now. Okay, so that's where this is. Okay, so here your end goal is to match the difference between the beginning balance of your account versus your ending balance in your cash account. And the correct terminology is how much actual cash you have. So I mean, if you actually let's say we do put 30,000 here, right? It doesn't make that much difference here, okay? Because you're still gonna get a discrepancy of 7,000. It's actually worse, okay? Because we're not missing $7,000. Okay, so that's why I want this to be 26, 625, because now I'm I'm missing
Okay,
less.
I was looking for. There we go.
Okay, so this number is supposed to match your beginning balance or your ending balance in your check account. In this case, mine doesn't. I'm off by $3,000, and yeah. Okay, so again, a lot of my students who've done this, because we before I taught the class, Mr. Sanchez, he actually had the students make their own business, like actually make their own business and actually do their own statement of cash flows. For some reason, they all did the cash flows correctly, or their cash flows match. So I don't know. I've been doing this for quite some time and I can't find it. So other than that, that's how you complete the statement of cash flows. Okay. The most important thing is that you want to recognize your net income or your net loss. You're going to total up all of your operating activities, which consists of your non-cash transactions, your current assets and other assets, as well as your current liabilities. Your investing activities is going to be primarily all of your fixed assets. And then your financing is going to be your long-term liabilities, as well as anything that you've done to equity.
Okay.
And then, of course, your beginning balance of cash that you started the company with or started the month with, and then your ending balance of what you have in your cash account after the year adjustments is done. So now we've completed step number 8. All we have to do is step 9, which is actually to properly close out all of our temporary accounts, which we will do tomorrow. Okay? So yay, we're almost there. We're so close. All we have to do is just zero out all of our expenses, zero out all of our revenues, zero out our income summary to equity, and we are done. Well, actually, we had to do a post-closing trial balance, but from all this, we are complete with step number 8. All right, any questions in regards to what we've done? So again, you will be tested on completing a trial balance, statement of cash flows, statement of equity, and the balance sheet. You will not be tested on completing the statement of cash flows. Okay?
Okay.
For the final exam. And I will go over all of the final exams, what to expect on the exam, and everything tomorrow. Okay? All right, then. If you don't have any other questions, you guys are free to go.